Welcome back to Lessons from the Fall. Today I want to talk about something that still feels surreal when I say it out loud. In 4 years, we've settled over $1 billion in private loans. And in the very first year alone, around $400 million. Now, when people hear numbers like that, they immediately think success, momentum, growth. But for me, what stands out most isn't the number. It's the journey from being considered an outsider to becoming someone high net worth investors now reach out to when they want help deploying capital. Because earlier on, that trust didn't exist. There was no institutional history, no billion-dollar brand, no legacy platform, just relationships, pressure, and the willingness to keep showing up consistently. And if I'm honest, for a long time, I felt like the outsider in finance. I'm not polished enough. I wasn't connected enough. Not for the right circles. Hey, but over time, I realized something important. In private credit, people eventually stop caring about perception. They care about outcomes. Can you structure deals properly? Can you manage risk? Can you communicate clearly? Can you protect capital? Because when somebody is deploying millions of dollars, they're not investing in hype. They're investing in confidence. And confidence comes from consistency. Now, what's interesting is where a lot of the capital is coming from. Dubai, Singapore, India, family offices, wholesale investors, sophisticated investors. And there's a reason for that. Because globally, private credit is becoming one of the fastest growing areas in finance. Traditional banking systems are tightening. Regulation is increasing. Banks are becoming slower and more conservative. At the same time, there's enormous amounts of global capital looking for yield. And that combined creates opportunity. Now, let's talk about Dubai for a second. Because Dubai has positioned itself very intelligently over the last decade. Low tax environment, global connectivity, aggressive investment culture, and a major hub for family offices and international capital. And what does that create? It creates liquidity. There's significant private wealth in Dubai looking for opportunities globally, particularly asset-backed opportunities in stable countries like Australia. And then there's Singapore, which, from a financial perspective, is one of the most sophisticated capital hubs in the world. Strong banking system, regulatory confidence, massive concentration of family offices, strategic gateway into Asia. And Singapore investors, especially sophisticated investors and private wealth groups, tend to think long term. They look for stability, structure, governance. And Australia appeals to them because, compared to many global markets, it still feels secure, transparent, and legally reliable. Now, combine that with Australia's property-backed lending and private credit becomes very attractive. Because private credit sits in an interesting position. It offers stronger returns than many traditional fixed income investments. But with real assets sitting underneath, and this is why we're seeing more family offices and wholesale investors move into this sector, not because it is trendy, because it solves problems. Investors today are asking different questions. They no longer just chase growth. They're looking for yield, cash flow, security, diversification away from the public markets. And private credit provides that. Now, obviously, risk matters. Not every lender is equal. Not every deal is structured properly. But well-managed private credit with disciplined lending and strong security has become incredibly attractive globally. And this is where things become interesting for us at Renown Lending and at Renown Wealth. Because increasingly, we're seeing international investors approach us directly. Family offices, sophisticated investors, wholesale capital groups are calling us constantly. Now, and they're not just asking about deals, asking about relationships, asking about access, asking about how Australian private credit actually works. And one thing I've noticed consistently especially with the investors from India, it is importance of trust. Indian investors are incredibly relationship driven. They look beyond the numbers. They look at character, consistency, communication. And what they're really investing in is the confidence. Confidence, that's their capital, is being managed responsibly. Confidence that there's transparency. Confidence that there's an alignment. And that trust isn't built overnight, especially internationally. It is built through conversations, consistency, showing up properly over time. And honestly, that's something I'm proud of. Because going from being considered an outsider to having sophisticated investors and family offices trust us with capital, that doesn't happen because of marketing. It happens because of relationships. And relationships are still the most valuable currency in finance. Now, do I think private credit continues growing? Absolutely. Because the market conditions supporting it are still here. Banks remain conservative. Investors still want yields. And businesses still need flexibility and capital solutions. And globally, there's more private wealth looking for structured opportunities than ever before. So when people ask me where finance is heading, I think the answer is pretty clear. More alternative lending, more private credit, more direct capital relationships. And the operators who succeed in this environment will be the ones who understand trust, not just transactions. Because capital moves where confidence exists. This is lessons from the fall, and sometimes the biggest shift in your life isn't when people stop seeing you as an outsider and start trusting you with their money.